Raman Gill's apprenticeship program launches today. I'm going to be participating in it myself. I'll talk about that and another Forex trade setup for you. Hi, this is Tim from TradingStrategyGuides.com. As some of you may know, I'm in Northeast Texas, and we're getting hit right now with a huge thunderstorm. So the noises you may hear in the background are all associated with that, including the rain on my roof. I was going to try to wait it out, but like everything in Texas, this storm is huge and will take all day to pass through this area. So apologies for any interference it may cause in this video. I'm going to tell you about Raman Gill's fourth video and a bit about her apprenticeship program. I firmly believe this will be helpful to all, even if this is not your first rodeo. And of course, today's trading maxim. Stick around and enjoy this thunderstorm with me. Remember to click the subscribe button and hit the bell so you don't miss any of these great Forex setups. All right, let's talk about the open, yes, I said open, and pending trades. The S&P 500 finally closed above the ascending triangle right here on Monday, but it did it on 77% volume. So I bought this half size, meaning only 1% total risk on my account for this trade. I'm long at 30.36.25. My first target is 30.70, and my stop loss is 29.85.75. I told you we'd be in something pretty soon, didn't I? I'm not sure what's up with the market right now, but there's really low volume. This Euro Australian dollar closed below the bull flag right here, but it only had 56% volume, so no trade on that one. I'll watch what happens for a few days, since the volume and volatility still seem to be dropping down right here. We'll see what we can do with this setup. Kohl's Corporation opened above the range right here, but closed back down inside the range. So as long as the volume and the volatility continue to drop, I'll move this range up to that level, which is around 54.28 or so, and we'll continue to watch for a close above that. Okay, let's talk about Raman Gill's apprenticeship program. I'm really looking forward to that. Then we'll look at today's Forex setup. I want to talk about Raman Gill's apprenticeship program for just a minute. If you haven't watched her videos, I recommend you check them out. Anyone who's been around here with me over the years knows that I'm not a sales guy. I'm a trader, I'm an engineer. I don't even like getting involved in the sales and marketing process. I leave that to the experts. So what you're about to hear is from me. I've watched Raman's 4 videos, including today's launch video. The more I listen to her, the more excited I get about this program. Included with the apprenticeship is an additional 8 bonuses that make this far more valuable than just the asking price. I've been around the block a few times now where trading is concerned, but I love to learn new things to make myself better. She's done some phenomenal things with her account this year, and I want to learn what it is that she does. So I'll be there right beside you on this apprenticeship program. I highly recommend you spend the time and money for this program. It will change the whole face of your trading. Okay, let's take a look at the Kiwi Swissy setup. Oh, we've got a nice trading range in play right here on the New Zealand dollar Swiss franc. The trading range consists, of course, of a strong support level, like this one here at 6,200. And a strong resistance level like this one up here at 63.80. Obviously this support level is better defined than the resistance with these touches here and these touches here and even this approach right here. As you know, I also like to see a nice decline in the volume, and this has been declining for most of this range, and a decline in the volatility is also nice. Just to make sure that you guys are clear, the declining volume here, obviously there was a little pop in the volume right here. okay? And that's okay because we got lower highs, continually lower highs, and it's started to drop down here, of course. There was a corresponding pop in the volatility right here, and of course it lagged a little bit behind the pop in the volume because the average true range, or ATR, is the average of the last 14 candle lengths, whereas the volume bars represent the volume traded, or in case of Forex, the number of trades for each corresponding candle. So this is a more instantaneous number, the bars are, and this average right here will lag behind it by a couple of weeks probably. So here's the plan. We will buy a daily close above the range or above 63.80, or we will sell a daily close below the range or below 6,200. On the breaking candle, the volume bar needs to reach at least to the volume average to be a full-size position. If it doesn't quite reach the average but does reach 75% of the average volume, I'll open a half-size position to reduce risk. You can calculate the percentage by dividing this volume number by the volume average, and your result should be at least 0.75. If it's not at least 0.75, then you need to stand aside and watch it go by, just like we did today on the EURAUD. The stop loss will be 1.5 times the ATR. Your first target will be 1 times the ATR. So again, on the breaking candle, you want to look over here at the ATR, and let's say for the moment that it's broken down to here, and this is the close. You will measure 1.5 times the ATR above that level for your stop loss, and 1 times the ATR below that level for your first target. If after entering the trade, candle closes back inside the range, we'll take the loss right then and not wait for it to hit the stop loss. We intend for these to break out explosively and hit the target quickly. If the momentum goes away, we want to shut this trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Now, typically I do this with 2 positions. The first has a hard stop loss and a hard take profit at the appropriate prices, and the second position will have a hard stop loss and no take profit directly associated with it. I also will only risk about 2% of my account on each trade, because no single trade should make or break you. And that's our setup on the Kiwi Swissy today. I tell you this every time, but I want to make sure that you remember it, so I keep telling you and keep telling you. I'm not telling you how to do this or what to do. I'm telling you how I handle these trades. If you want more details about what I do, look below this video for a link to my trade management video. But if you've got a trade management plan that works better for you, by all means use it. Trading is very personal, and things that work for me may not work for you. You have to understand your personal psychology to find the best strategies for your own trading. And of course, psychology, in my opinion, is the most important part of trading, and the trading maxims are my way of helping to handle my personal psychology. Today we're going to dive into the archive for our maxim. A maxim is a general truth, fundamental principle, rule of conduct, or proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today we're going way back to the beginning, to one you hear quite often, but I want to explain a little better. Tim's trading maxim number 5. A line is never just a line, it's always a zone. If you've followed this channel for more than 30 seconds, I'm sure you're sick of hearing this one. I stress it because it's something that tripped me up for a long time. I drew my support, resistance, trend lines, whatever, exactly to the pip, and I expected price to exactly touch it in reverse, or it wasn't a touch of the line in my opinion. Or I wanted to push through 1 pip and that was a break of the line and I was on it. I wasted a lot of time thinking that way, lost a lot of money thinking that way. Now, I've shown you this drawing a few times. This line represents a support line that comes from prior price action. As price approaches this line, some traders will place a buy order just above the line to be sure they get into the trade on a reversal ahead of support. Other traders will place the buy order just below the support line in anticipation of the price pushing through the line and then reversing, so as to get a better price and reduce their risk. Now, if a preponderance of the traders buy above the line up here, the support level will move up a few pips. If a preponderance of the traders buy below the line, the support level will move down a few pips. So every time price approaches this area, it'll reverse at a new location until it finally breaks through this level. And that is why a line is never just a line, it's always a zone. And I've had new traders ask me, how wide is the zone? And they wanted me to really nail it down. That's the problem. Nothing in Forex is exactly to the pip. If I were to say the zone is 10 pips wide, then these new traders would just do exactly what I was doing before and splitting the pips. That's why I tell you that these patterns and lines are never perfect. It's all very fuzzy and blurry. I say if it comes close, then it's a test of the line. Don't get hung up in exact pip locations. Tell me in the comments if you understand what I'm saying here. Also let me know if you have any suggestions on a good way to explain this concept. Remember our Kiwi Swissy trade plan here. We're going to buy a daily close above the range or above 63.80, or sell a daily candle close below the range or below 6,200. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. Remember to click the link below to the trade management video if you want more details. And you surely don't want to miss any of these great trading picks. Sign up for my free trading picks email list so you're sure that you won't miss them. I'll be sending out 3 or 4 trading picks a week, everything from stocks to futures to cryptos to Forex, and you'll be the first to see them. And the best thing about it is, it's free. The link will be below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. We'll have a nice trade setup or two on each one, and maybe some extra Q&A or training on Wednesdays. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a trading video, or both. And remember, the only stupid question is the unasked one. Oh, and don't forget to comment below on this line zone thing and what's the best way to teach that to people and help them to understand it. Tell your friends about us and help us make this the best trading channel on the internet. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great remainder of your week, and I'll see you next time.